in the last few hours, US President Joe Biden reassuring the American public that the banking sector there is safe. It comes after the biggest failure of a US bank since 2008. Silicon Valley Bank, the victim of an old-fashioned bank run after a fire sale of securities had a loss spooked customers. Well, despite shoring up any contagion effects today, the US and indeed now the UK scrambling to prevent this from ballooning into a wider financial meltdown. So tonight we ask, is this the start of a bigger banking crisis? Well, joining me to unpack this complex myriad of interest rates, macroeconomics and banking systems is Mohamed El-Erian, Chief Economic Advisor Allianz, and Ryan Lamont, who is co-founder and CEO of Neovision Wealth Management, based here in Abu Dhabi. Let me start with you, Mohamed. Simply, do you believe, or what do you make of the action, firstly, taken to avert what looked like a ballooning crisis?
So I think it makes total sense that both in the US and the UK, the authorities move to protect the deposits and not protect the shareholders or the bondholders. So I think that was appropriate. I think the way in which it was done, if you compare and contrast the UK to the US, I think the UK was cleaner, but then it was easier for the UK because it was a smaller SVP entity there. More generally, what we are seeing are the consequences of a prolonged period of very loose monetary policies, followed by the Fed hitting the brakes. And we should just be aware that the probability of financial accidents have gone up.
That's fascinating. You're saying the risk of financial accidents have gone up. Explain what you mean.
So a lot of the financial system got used to interest rate being low forever, got used to the Fed putting in liquidity, and therefore behaved in a certain way. The example here in this particular bank is that as their deposits went up, they put it into treasury bonds and didn't think about what happens to the value of those bonds when interest rates go up. As we know, when interest rates go up, the value of the bonds come down. So you have a whole ecosystem that got used to this very accommodating liquidity situation. The Fed didn't react quickly enough to inflation, called it transitory, and therefore has had to raise interest rates higher than would have had to otherwise. And now we are seeing the lagged effects of that.
So had the central bank, the Fed, not raised interest rates, the understanding is that inflation would have gotten further out of control, and we are staring down the barrel of a very hard landing as far as a recession is concerned. Your point is, it seems that they didn't raise rates quickly enough, and now the problem is, are they in a position to keep rates high enough, given that there is some, it seems, real systemic issues in the banking sector? Is the Fed in a position to keep rates high enough to avoid the further risk of inflation and a very hard landing? What's your perception at this point?
So your analysis is absolutely right. Remember, for most of 2021, the Fed kept on assuring everybody inflation is transitory. Transitory, Becky, is a very dangerous word because it means temporary, it means reversible, it means don't pay attention. This thing is going to go away. So people didn't adjust to what turned out to be not transitory inflation. And a number of us were warning, look, be careful, this is different. And then when it finally retired that word from its vocabulary, if you remember, at the end of November, it didn't do anything. And it's not till March that it started raising interest rates. So it was very, very late. It's as if you're driving down a freeway, a motorway, and you should be slowing down, but you're not. Your foot is pedal to the metal. And then suddenly you realize that you're on this inflation fog, and then you slam on the brakes. What will that do? It will tend to cause an accident. And that's exactly what has happened.
We are taking a really good look with the best analyst in the business at the macroeconomic story here. I just want to get our viewers just a little more of what Joe Biden said earlier on. Mohamed, stand by.
I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses.
Has he done that? I mean, there are three things that we have to be really, really sort of mindful of here. Other banks, you know, what happens next in the banking system? And you say there is a possibility or the risk of a real accident here. How depositors feel at this point, you know, we know that depositors around the world were really concerned about what would happen to their bank accounts this Monday morning. And then Fed rate hikes. Take that on.
So first, let's start with depositors, because that's important. Deposits are safe. People in the US, in the UK, where there has been policy announcement, should not run to the banks to move their deposits. Your deposits are fine. There's no need to worry. The second issue is I'm more worried about what, Becky, you and I call the non-banks, the financial institutions that are outside the banking system, that are even less well regulated, less well supervised. That is where the imbalances can occur in a systemic sense. And finally, what you point out to is what I call the trilemma. How does the Fed in this environment, now that it's so late, balance controlling inflation, financial stability, and third and foremost, minimizing the damage to the economy and jobs? It has become much harder to meet all these objectives.
We started with the question, are we staring down the barrel of a financial crisis here? So let me put that to you specifically. Are we?
I don't think so. I think we are staring down the barrel of a really bumpy journey for the economy, for finance, and for policymakers. But I do not think that this is 2008.
Mohamed, thank you. It's a joy to have you. Let's turn to my guest who I've got here with me in the studio. Ryan Lamond is co-founder and CEO of Neovision Wealth Management. This is a story with global implications. I'm well aware you will be too, of the people in this region who were equally as concerned about how the markets were going to open up this morning. So they were concerned about banking stocks, the financial sector as a whole. And then there were many, many people in this region, particularly, for example, in Israel, who bank with SVP. And those are mainly in the tech sector. And there were some real concerns about whether those who had deposited with that bank would get their money out this Monday morning. So the US and UK have taken steps to ensure that deposits, as Mohamed suggested, are actually free and accessible to people. But there is a wider story here, as Mohamed and I have just been discussing. I know you are no fan of regulators nor intervention in the markets, but what do you make of what we have just seen over the past, 72 hours or so?
Well, what we have seen is the following. It's not only about SVP. Over the past few days, we've witnessed the second, third, and fifth largest bank failures in US history. SVB is the second. The third is Signature Bank. And the third is First Republic Bank out of Dallas. These are three banks. We're talking about several $100 billion of assets here. Okay, so it's not only about SVB. Second, let's look at the region here. What we know is that there are roughly 500 startups in the MENA region, Middle East and North Africa, that are clients of SVP. Over the weekend, there was a lot of angst among many of these startups. I know a few here in the UAE. They were very afraid. And what's even worse is that vultures were surrounding them and telling them, sell us your deposit for 60 cents on the dollar, because on Monday you won't have anything. Now, thankfully, all of them have waited until Monday, and here we are. Deposits are guaranteed for these startups. As Mohamed has said, these deposits are safe. However, everyone else has been wiped out, shareholders and unsecured creditors.
I just want to spend a moment talking about what is a relatively nascent sector in in the UAE, but a wider, more developed tech startup market, as you rightly point out, around the region, not least in Israel. What does this region need from its banking sector?
Why did these startups go as far as the US to open accounts? That's the big question. I think it's a struggle for many of these startup owners to open a bank account in the UAE. It's just very hard, okay? And that is why they are going abroad, cross-border, to open accounts. Now, thankfully, we're starting to have digital, very advanced banks here in the UAE. And I can name a few. There are a couple of here in Abu Dhabi, a couple in Dubai, who are stepping in and becoming on the forefront of helping these startups. However, it's still very, very early stage. These startup owners will need banking institutions that are open, pragmatic, nimble, and can adapt to them, open account for them, cater for their daily needs financing, as well as their long-term financing, Series A, B, C, etc.
Were you surprised to hear that Sheikh Tahnoon, who is the Interior Minister here, brother of the President of the UAE, the head of two very, very significant funds here? One is a sort of sovereign wealth fund in Adia. The second and third, in fact, are Abu Dhabi assets, which and private family money as well. Were you surprised to hear reports that he was potentially in the bidding for SVB's UK arm, which, by the way, we now know has been bought by HSBC?
Well, to tell you the anecdote, I was sitting with a few peers and we were discussing this crisis because we get together to understand better.
This is over the weekend, right?
Yes, absolutely. And we were over Zoom, actually, not physically. And we were saying, why don't we just gather together and maybe try to bid for a piece of this, because there's a lot to make out of it. And one of the gentlemen who was on the call, he said, no, don't worry. His Highness Sheikh Tahnoon will beat us to it. He's always on the forefront of these opportunities. And I think he was interested in the US one and then the UK one. But yeah, it took another direction.
No, I was just thinking about the comments that you made about this market needing its banking system that understands the nature of the tech startup scene, and therein lay a great opportunity. Before I let you go, I do just want to run this little bit of sound from Benjamin Netanyahu. Sorry, this is a tweet. Let me just bring this up for you on the screen. Benjamin Netanyahu, in response to the news at the weekend of the SVB collapse: "We cannot ignore the collapse of this bank. Today I will consider with the finance and economy ministers and the governor of the Bank of Israel whether or not actions are necessary to assist Israeli companies in distress, mainly with cash flow due to the collapse of SVB." If any of you watching wherever you are around the world was unaware that this story of the Silicon Valley Bank has global repercussions, we are just discussing those very repercussions and the way that their tentacles get out to the UAE. Yeah, so finally, just the tech sector as a whole here. Positive? What do you see as its outlook?
The outlook is definitely positive. I'm going to say a phrase, hope it's not going to be misunderstood. I'm not unhappy about SVB's collapse with respect to startups in the region, particularly in the UAE, because hopefully now someone will step up and cater for them here in the UAE. Let's stop catering for these companies with banks cross-border and have them catered for here locally. But yes, I am positive on them.
Ryan, good to have you.
Thank you.
Thank you, sir. Ryan Lamont in the house.